was a strong and friendly fella with the name of Campanella. He was someone special, I could see right off the bat. There was something.
Webcasting from the Little Bell Publishing Studios in Rockton, Illinois, this is the Mortgage Messenger with host Jim Campanella. Hi, I'm Jim Campanella, and today's August 16th, and this is the Mortgage Messenger for the week ended August 13th. Last week, like it has been the story for the last 90 days, rates remain stagnantly low. Certainly a fantastic time to refinance. It's a fantastic time to purchase. It's a fantastic time to go out and borrow money. Last week, all the indicators were, again, that rates are going to stay low, although at any point they could start going up. So I wouldn't be sitting on the fence long if you're out there not having locked yet. You should be doing that. The Federal Reserve, met on Tuesday. They did not raise rates as expected. Of course, they won't be for a little while yet, because inflation is very much in check. In fact, inflation is rather low, to the point that they're slightly concerned it's too low. But they did make a change in their policies, the Federal Reserve did. And what they've done now is they've decided to go out and purchase back some treasuries. Now, previously, they were buying back mortgage-backed securities, which brought the rates down. Now they're going to be buying back some treasuries. So, as an indicator, that means that rates should remain low. But we use the treasuries as a guideline of what the mortgage rates are going to do, whereas mortgage-backed securities are what the mortgage rates are going to do. So a lot of people run around saying, well, the 10-year treasuries dropped. Why haven't interest rates gone down even further? Well, the reason they haven't gone down further is because we're not directly attached to the 10-year treasury. It's more of an indicator. And now that the Fed is purposely going out and buying those treasuries, the 10-year treasury is going down while mortgage rates are pretty much still flat. So even though they're fantastic rates, they're not dropping to the same pace that the treasuries are. And that's simply because the government's not buying mortgage-backed securities, they're buying treasuries. There you go. There's your lesson on interest rates for the day. Coming up this week, tomorrow, Tuesday is the big day. PPI, Producers Price Index, and housing starts are coming out. Obviously, the Producer Price Index indicates inflation, whether or not we're seeing any. And then housing starts, of course, tells us how the real estate industry is doing. So tomorrow's the big day for the week as far as the direction of interest rates. Outside of that, really not much going on for this week as far as rates are concerned. I know I sound like a broken record. I know I've said it before. But if you're on the fence, if you're thinking about refinancing, if you're thinking about buying, do it now. Certainly if you're thinking about buying, you may want to do it before FHA changes their guidelines. As I think we mentioned in a previous podcast, there's some guidelines changing that on a $200,000 loan, it's going to cost $58 more a month. Originally, I believe I mentioned it was going to take place in September. Now it's taking place in October, but it is going to happen. It's going to be more costly to get an FHA loan. So keep that in mind. You want to be able to lock down and take advantage of the better deal, which is right now. Previous weeks, we talked about the tip of the week. We're going to do that again today, but a little bit different. Of late, I've had quite a few customers talking about purchasing a home, first-time buyers mostly, but not all. Some are people that are selling their homes and buying another home, or have been renting for a while and want to now purchase a home. And they haven't been getting themselves pre-qualified. For me, for everybody in the industry, that's second nature now. You have to get yourself pre-qualified or pre-approved. You've got to go forth, talk to the lender before you go out looking for houses. Sure, you can talk to a realtor, get an indication of what's out there, price range you want to get into, so on and so forth. But the first step you want to do is get yourself pre-approved or pre-qualified. You need to talk to a qualified lender, somebody who can assist you, can get you through the hoops of what's going on. The world has changed from the way, if you previously owned a home, the world has changed from what you used to do. You used to go buy a house, then get yourself a mortgage. You need to do that first now. I think most people realize that, but obviously not everybody does, so that's why I'm talking about it today. You need to reach out to a lender. Most pre-approvals and pre-qualifications are free. You shouldn't have to pay for it. It does take some time. It does take a lot of documentation, but you're better off doing that now so you can walk up to a realtor and say, here it is. Here's my certificate or my approval notice or pre-approval or whatever. Let's go out and look at houses. This way they know you're serious about the purchase. They know that what you can afford. They know that you're with a lender, and you go forward from there. So if you're considering purchasing a home, certainly go to the websites, look at all the houses you want to look at online, talk to a realtor if you wish. But your first serious move is contact your lender, whether myself or somebody else. Contact your lender and get yourself pre-approved. Well, I can tell by the clock on the wall outside our studio windows that our time is up. As I've mentioned previously, we do have webinars on Wednesdays, Thursdays, and Saturdays. One for credit, on how to build your credit and repair, not necessarily repair your credit, but how to improve your credit. And then another one on buying a home and being a first-time buyer. You want to check these webinars out. They're about 45 minutes long. They're totally free. You have no obligation. Check them out at www.mortgagemessenger.net/webinars, and it'll take you to the first page where you can register for the webinar. Always please check out my website, www.mortgagemessenger.net, for more information about what we talked about today, as well as some other interesting things on the blog. So until next time, thank you for viewing.
I can't forget you, Campanella. You're still the MVP within my heart. You're still the MVP within my heart.